Now, finally, the reporting entity, as what I've told you, class, we need not bother ourselves in learning how to identify the limits of the reporting entity, because by the time we'll be preparing our financial statements, class, it would be very clear already. The limitation would already be provided for us. And even if it's not, class, we have other standards that govern the preparation uh, of entities that involve a parent, that involve a subsidiary. We have standards that govern the preparation of separate financial statements and consolidated financial statements. We also have accounting standards that govern the preparation or the treatment for joint ventures and investment in associates, class. Okay. So as to the limit of what comprises or what constitutes a reporting entity, class, this should not be a source of challenge for us, class. We did not cause problems on ourselves, class, just on this matter. Okay. This would not be a big issue when we are already preparing or learning how to prepare financial statements, class. Just a guide, class. Okay. Paragraph 3.10 in the framework, class, is a good source for a multiple choice question. You have three statements in paragraph 3.10, and this could be you could be asked which of the following statements is not true. Okay, so it's true that a reporting entity is an entity that is required to prepare the financial statements. That should make sense. A reporting entity can be a single entity or a portion of an entity or can comprise more than one entity. So basically, because of this possibility, class, this gives the possible challenge on determining the reporting entity. But again, let's not complicate this matter. This would not arise as a recurring problem, class. Okay. And finally, class, very important, a reporting entity is not necessarily a legal entity. It need not be an entity that is given a juridical uh, personality, class. Okay. It need not be a corporation. Okay. You may have joint arrangements. You may have joint ventures, class, which are not necessarily a legal entity. Okay, but again, as I mentioned earlier, we have a separate standard that governs joint arrangements, class. And if I remember it correctly, joint arrangements is governed by uh, PFRS 11. Now, you might ask, why do we have PAS and why do we have PFRS? PAS stands for Philippine Accounting Standards. PFRS stands for Philippine Financial Reporting Standards. Okay. Basically, class, the PFRS are the newer standards, while the PAS are the older standards, class. PAS, your Philippine Accounting Standards, or its international equivalent, the International Accounting Standards, are the standards that were issued during the existence of your ASC, your Accounting Standards Council. And if you can remember, class, the ASC was changed or replaced by the FRSC, class. And basically, the standards issued by the FRSC are now referred to as your PFRS or its international equivalent, the IFRS. Okay. So PAS or the IAS are the standards issued by the old accounting body, which is your ASC, Accounting Standards Council, while the PFRS or the IFRS are the standards issued by the new uh, standard setting body, which is your FRSC, the Financial Reporting Standards Council. Here, class, you are introduced to a new term, class, consolidated financial statements. These are the financial statements of the parent and all its subsidiaries. Okay, if the relationship between one entity and the other entities would be a parent and subsidiary, class, then the financial statements that is prepared for the entire group is referred to as consolidated financial statements. But if the relationships of the entities in the group is not that of a parent and a subsidiary relationship, then the financial statements would be referred to as a combined financial statement. Okay, class, an entity becomes a parent of another, class, if the parent is a majority shareholder of another entity. If one entity has control over another entity. If the parent invests in another entity and the investment of the now parent reaches to a point of being a majority shareholder, reaches to a point that the investor, the parent, already has control over the investee, the subsidiary, then their relationship would be referred to as a parent and subsidiary relationship. Okay. It does not mean that if you invest in another corporation, then that corporation would already be your subsidiary. Another entity will become your subsidiary only when you obtain control over that entity. Now, again, we did not concern ourselves so much about preparation of consolidated financial statements from the framework class because we have a separate standard that governs the preparation of consolidated financial statements. And if I'm not wrong, uh, PFRS 3 governs business combinations. So the preparation of your consolidated financial statements class is governed by PFRS 10. Then we also have another standard class that governs the preparation of the separate financial statements. Separate meaning even if this entity has affiliates class, even if this entity has a parent, even if this entity has a subsidiary, if the financial statements that you are preparing for is only for this entity without inclusion of the other affiliated entities, then we refer to that as your separate financial statements. It's possible that the parent will prepare its separate financial statements without including the operations of the subsidiary. Okay? Thus, you must understand that there's a need to prepare consolidated financial statements because if you're the parent and you control another entity, a complete information about the financial resources of the parent will include also the operations of the subsidiary. But if your focus is only on the separate financial statements of the parent, that's possible. If your concern is the preparation of the separate financial statements of the subsidiary, then that is also possible. The preparation of separate financial statements, again, if I remember it right, it's governed by PAS 27. Paragraph 3.13 class. Determining the appropriate boundary of a reporting entity can be difficult if the reporting entity is not a legal entity and does not comprise only legal entities linked by parent-subsidiary relationship. Again, there are other kinds of relationships between entities class, and there's always a need to prepare a combined or a group financial statement class. Okay, and determining the limitation class or the boundary of the reporting entity would be difficult if we are not dealing with legal entities or the relationship between the entities is not that of a parent and subsidiary. But again, we did not concern ourselves so much at this point because there are standards that provide rules in determining or setting the limits or boundaries for our reporting entity. So just to highlight certain parts of the framework class, consolidated financial statements provide information about the assets, liabilities, equity, income, and expenses of both the parent and the subsidiary. Okay, that's what we've mentioned earlier. The consolidated FS is for the parent and the parent subsidiaries. Okay, as if they are treated as a single reporting entity. Because even if we are dealing with more than one entity, consolidated financial statements are the financial statements of these group of entities as if they are a single reporting entity. Then finally, consolidated financial statements are not designed to provide separate information about the assets, liabilities, equity, income, expenses of any particular subsidiary class. Okay, so again, consolidated financial statements are geared more on the view or the perspective that the parent and all its subsidiaries belong to a single entity, belong to a single reporting entity.